Hello?
Ma'am.
Hello?
Ma'am. You are audible, ma'am.
Now I am audible. Almost
Yes.
half an hour class is over.
Yes, ma'am. Now you are audible, ma'am. Before you are not audible, ma'am.
You have to inform me, no, why I am not audible. Because half an hour already I have finished my introduction and now I am with the components of Indian financial system. It's okay. Now I'll start again.
Okay, ma'am.
Hello?
Okay, ma'am. Okay, ma'am.
Puran Sai is speaking.
Yes.
Just I was
Yes.
calling Radha Krishna and one boy Karre Karun is there. No, yeah, I called him also to confirm whether I am audible or not because I am not getting any answers from students. So I got a doubt. Okay, fine, ma.
Okay,
So
ma'am.
you know about you. Nothing was audible since starting.
Yes, ma'am.
Oh my God. Okay, let's start again. Huh?
Okay, ma'am.
So first today my name is Dr. Sarita. Now I'm going to teach you the financial services, financial markets and services. So you know the syllabus. What is syllabus? You have syllabus copies with you?
Yes, ma'am. Yes.
Yeah. Okay.
Book is there.
I'll share the syllabus. See, the total syllabus is divided into 5 blocks. This is everything I explained actually. And each block contains three to four units. And today we are going to discuss about the block one. Okay. So first we will understand about what is financial system. What is the meaning of financial system? Okay. So what is financial system as with your idea? Tell me anyone. So actually when we talk about finance, we'll think it is money. Okay, monetary terms or whatever money related things will come under finance and financial system. So first let us understand about what is financial system. Financial system comprises a set of subsystems of financial institutions, financial markets, financial instruments, and financial services, which is are also known as components of financial system. So how the whole financial system works? It works under four components. One is financial institutions, second one is financial markets, third one is financial instruments, and fourth one is financial services. Okay. So how these four components will help? These four components will help in formation of capital. Understood, students? Say yes or no. Okay. The class should be hello.
Yes, ma'am. Yes, ma'am. Understood, ma'am.
Yeah. So how this financial system works? How it helps? It helps in formation of capital. What is capital? What is capital, ma?
Money required for business.
The money which we invest or required for business. Okay. So a well-knit financial system indicates the economic growth and development of any country. Okay. So what we say is how the world will look at the country, whether it is underdeveloped country or it is developing country or it is developed country by seeing its strong financial system. Okay. So strong financial system automatically leads to the development, economic growth and development of any country. Okay. So how this financial system gets money? Where this money will come, where this money will go, flow, how the flow will take place. So what it does actually, it is a means by which the savings are transferred into investments by mobilizing the surplus funds and utilizing them effectively for productive purposes. So if for example, if I am earning 1 lakh rupee salary per month, my expenses are 50,000 rupees. My overall expenses are 50,000 rupees. And the remaining 50,000 I am going to deposit in my bank. Okay. So like this, so many individuals, whatever the surplus money they are having, they will deposit their surplus saving into banks or other financial institutions. Now you are an entrepreneur. Okay, you want to do some business, you need some capital. Okay, so then you will go and knock the door of the bank. Now the bank will give you the money. Whose money it is? It is my money, your money, others' money who have surplus. Okay, so what happens when the borrower gets the money? He starts the production of goods and services, and then those services and production will be consumed by peoples, individuals of a country. They'll pay tax, and for getting the revenue, this entrepreneur will pay interest to the bank, and the depositor will get also some interest, and then the government will get some revenue in the form of tax. So one is linked to another. Okay, again the money will flow, and it overall the financial system serves as a link between the savers and the users. Understood how a financial system helps? The
Yes,
financial
ma'am.
system serves as a link between the savers and users. Okay, so the savings, whatever the surplus fund is there, those savings are channelized into productive investment across geographic boundaries. Okay, so it helps in the selection of the projects to be financed, and at the same time follow up the performance of these projects periodically. Okay, so a strong payment mechanism system is provided by the system for the exchange of goods and services, and then the financial system also helps in the capital formation by matching the demand and supply of funds. Okay, demand and supply of funds, then whatever the risk involved. For example, if I am investing my 50,000 money into bank, I should have bharosa, some trust on bank, no, whether my money is safe or not, isn't it? When I feel that my money is safe, absolutely safe, then only I'll go and invest in the bank. Okay, in future purpose, whenever I require my money back, I can get. So that kind of trust should build between the bank or financial institutions and between the individual. So the whatever the risk which is involved, if the bank has given my 50,000 to some merchant, the merchant has not paid the money back to the bank. So now who is responsible for my money? Who is responsible? Hello? Hello, students?
Ma'am.
Anyone? Who is
Nobody,
responsible?
nobody responsible, ma'am. We are only
Why
responsible.
nobody? Why nobody? The merchant, the whom the bank has given loan, do you know him? Do you know him, ma? Hello?
Yeah, what is your question, ma'am? Can you repeat?
Actually, I have deposited my money in the bank. Okay?
Yeah.
So the bank gave my money to some other person, loan.
Hmm.
For example, Vijay Mallya.
Hmm.
Vijay Mallya run away from our country.
Then bank is responsible.
Then bank is responsible. Yes. So what is the main thing? Whatever the risk, I want to explain you here. Who will carry the risk? So the risk involved in mobilizing and utilizing the funds is well managed by the financial system. Understood? It is
Yes.
well managed by the financial system. Okay. So then whoever needs the information, detailed information is provided to the interested parties in the market. So what you have understood, a financial system has four components which consist of financial institutions, financial markets, financial instruments, and financial services. Financial system helps in economic growth and development of any country, and a strong financial system indicates strong economic growth of a country. Okay, so anyone who want to measure country's development, they will look at the financial system of a country, and they will decide whether the financial system of the country is strong or not. Okay, so financial system serves as a link between the savers and the users. Okay, they will mobilize the surplus savings, and those savings will given to the users. So Like that, the economic that the production of goods and services take place, and individuals are going to have those services, and through that, the companies, entrepreneurs will pay tax to the government, and government will get revenue generation. Okay. So what are the functions of financial system? Now we have understood the meaning of financial system and what are its components. Okay. Just slightly we understood here. Now we'll understood the functions of financial system. So the first function here, here some functions are listed on the screen, but still there are some more functions. First, the main function is mobilizing savings. Okay, mobilization of savings. So financial system of country plays a significant role in the economy and its development. Okay, so mobilization of saving, channelize the savings of the individuals and make it available to the borrowers and the companies for goods and services, for production of goods and services. As now only I told that it will establishes the link between the savers and investors. Okay, and whenever the government also needs money, needs money for the welfare, these financial services, financial markets supply necessary funds to the government also for social welfare activities, public health, education, development, and for also defense infrastructure, then mobilization of financial assets. Okay, so through financial assets, whether currency, bank deposit, post bank, saving deposit, life insurance policies, bills, bonds, equity shares, all through this, the surplus money is invested by the individual, and that money will be used for the welfare of the people. Okay, so then it has a payment system. What payment system means is it provides a channel for payment whenever and wherever the payer wants, with the help of checks, credit card, debit card, and thus reducing the burden of carrying cash, facilitating quick and easy transactions. Okay, financial system. As banks, we have NPCI. NPCI also, what NPCI does is the online transaction, digital transaction, whatever it is, they facilitate the services. Okay, then it manages the risk. Okay, it pools the funds from the individuals, and then whatever the funds are there, they are transferred to the development of resources, and it also whatever the risk involved, it will manages the risk. Okay, so how risk management it will take place? For example, any individual get met with an accident, or any individual income risk is there, health risk is there. So financial services will help by insurance companies. Okay, by life insurance options. Then it will also help in creation of credit. Okay, so banks accept deposits and creation of credit. It helps in creation of credit, and then it helps capital formation for the entrepreneurs and companies. It also information provided for the relating to the market, various financial assets, enabling the investor to choose the best investment options and portfolio allocations of their wealth. So these are the different functions of financial system. Okay, let us understand about what are the different components of Indian financial system. So till now we understood what is the meaning, what are the different functions of financial system. Now we will learn in context of Indian financial system. So let us understand Indian financial system have 4 components. Okay, those are financial institutions, financial markets, financial instruments, and financial services. So again, financial institutions are broadly classified into banking institutions and non-banking institutions. So in banking institutions, it is again segregated into commercial banks and cooperative banks. Commercial banks are public sector banks, private sector banks, regional rural banks, and foreign banks. Non-banking institutions are organized financial institutions, unorganized financial institutions. Okay. Then again, next we will move to the financial instruments. Okay. Then financial instruments, we have term and type, short term, medium term, long term. And then we have type, primary securities, secondary securities, and innovative instruments. Then if you talk about financial markets, money market, and capital market. So money market again divided into call money market, treasury bills, commercial bills. Capital markets divided into primary market, secondary market, and derivative market. So one by one we'll understand all this. Okay. Financial services, fund-based, fee-based, leasing, hire purchase, and factoring. Then fee-based are merchant banking, credit rating, mergers. So this is the whole system or components of our Indian financial system. So let us understand about what is financial institution. So as now only I have told that they are classified into banking and non-banking financial institutions. So the Indian banking institutions are subdivided into organized and organized sector. So RBI is the apex institutions of all banking organized sector. RBI, which organizes and runs, supervises, regulates, and develops the monetary system and the financial system of the country. Okay, so the organized banking sector consists of commercial banks, cooperative banks, and regional rural banks. Commercial banks are categorized into public sector banks and private sector banks and foreign private sector banks. So the unorganized, who are unorganized sector? What is unorganized sector? Organized banking sector consists of indigenous bankers, moneylenders, Seth, Shaukars, who carry out the functions of banking. Okay. So moneylenders, when we put some gold or our property papers, they'll give. So these kind of unorganized banking sectors will be more see in rural areas. Okay. So due to the illiteracy and due to the not much awareness, they'll go and immediately approach to the unorganized people's unorganized banking sector like Shaukar, Sage, moneylenders, and they'll take the undue advantages of the poor people and poor farmers in the rural areas, and they give money, they lend money to them on higher interest. Okay, so the non-banking financial institutions again categorized into unorganized and organized sector. So the organized non-banking financial includes IDBI. We'll call it as IDBI, Development Financial Institutions like Industrial Development Bank of India, Industrial Credit and Investment Corporation of India, that is ICICI, Industrial Finance Corporation of India, IFCI, Industrial Investment Bank of India, IIBI, Integrated Rural Development Program, IRDP, State Financial Corporation, State Industrial Development Corporations, NABARD, Agricultural Banks, okay. Then Life Insurance Corporation, General Insurance Corporation, Unit Trust of India, mutual funds, all these come under organized non-banking financial institutions. Okay, non-banking financial institutions. And the organized financial institutions include, unorganized financial institutions include hire purchase and consumer finance companies, leasing companies, factoring companies, merchant banking companies, credit rating agencies, etc. So this is about financial institutions. Okay. So here a clear picture is given about financial institutions. You can see which kind of banks come under what. So now the next we are moving to learn about financial markets. Okay, so the market, the term market in general means it is the aggregate of possible buyers and sellers of a certain goods or service and the transaction between them. So when market is there, their potential buyer and potential seller will be there, and they both agree on same thing, and the buyer will buy the goods, the seller will sell the goods, and the transaction will take place. In actual means, it is called what? It is called market. Okay, students, are you hearing? Hello?
Yes,
Yes,
ma'am.
ma'am.
Are you able to follow me?
Yes, ma'am.
So now the term financial market, we understood about what is actually market. So now we will understand about what is financial market. Okay. Financial market may be described as any marketplace where buyers and sellers participate in the trade of financial assets such as equities, bonds, currencies, and derivatives. Derivatives are product markets. Okay. Like petrol, sugar, gold, all these will be traded. No, that kind of market is called derivatives. Okay. So financial markets are categorized by transparent pricing, basic regulations on trading, cost and fees markets, and uh, the forces which determine the prices of securities traded. So we will buy the shares, securities, we will invest in gold. All these come under financial markets. Okay. So financial markets refers to the organization that facilitates the trade in financial securities. For example, we can say that stock exchange or a commodity exchange. Okay, derivative market is also known as commodity market. Okay, it may be in a physical form, physical location, or an electronic system. Okay, so now financial markets can be domestic or they can be international. So this is open for everyone. Even foreigners may invest. We can invest in foreign stock market also. Okay. So financial markets match those who want capital with those who have it. Okay. And facilitate the raising of long-term funds from the capital market. The transfer of risk in case of derivatives market, the transfer of liquidity in the money market, and the international trade in the currency market. So financial markets, what it does, it those who want capital and those who have it, it will act as a bridge between both of them. Okay. So in the financial markets, mainly prices may rise above historical norms during the periods of heavy trading and demand of securities. Okay. So here we should one understand that they connect the link between the lenders and the borrowers. Okay. And who are lenders? Lenders here are individuals and companies. Who are borrowers? Borrowers may be individuals, companies, central government, municipalities, public corporations, whoever it may. Okay. So here the individuals may borrow money for their short term as well as long term purpose through bank loans. Companies borrow money for their short term or long term purpose, cash flows, and also modernization or future business expansion. And government borrow by issuing bonds. Okay. Government also borrow on behalf of nationalized industries, municipalities, local authorities, and other public sector bodies. Okay. So public corporation, as you know very well, they are postal services, railway companies, and utility companies. And borrowers may also well borrow internationally with the aid of foreign exchange market. So simply we can understand that financial markets are usually we will call as marketplace where buyer and seller participate in the trade of financial assets. What are financial assets? Financial assets like equities, bonds, currencies, and derivatives. So these kind of financial instruments trade will take place at financial markets. Okay. So there are different types of financial market. Why it is important question which you may get in your exam. with regard to the financial markets. What are the types of financial markets? So here we have two, the security market, types of financial markets. We have two, that is primary market and secondary market. Okay. So what take place in primary market? In primary market, new issues. Okay. So the primary market provides a channel for sale of new securities, while the secondary market deals in securities previously issued. So this is the main difference. Okay. What? It will primary market provides a channel for sale of new securities, whereas the secondary market deals in securities previously issued. So the subdivision of financial markets are money market, capital market, okay, money market, capital market. Then we have stock markets, okay. All these are comes under financial market, okay. So we have on the basis of financial claim, we have debt market, equity market, and on the basis of maturity, we have money market and capital market. Okay. So let us understand what is capital market. Okay. First, we'll understand about money market. Money market provides short-term financing and investment. Money market is a market for debt securities that pay off in the short term, usually less than 1 year. So whatever the debts which are given for a period of 1 year or less than 1 year, that comes under money market. Okay. So this market encompasses the trading and issuance of short-term non-equity debt instruments, including call money, notice money, treasury bills, commercial papers, bankers acceptance, certificates of deposits, etc. Okay. And then we have capital markets, whereas money market deals with the 1 year short-term period, capital market is for long-term debt. Okay. So capital market is a market for long-term debt. In this market, the capital funds comprising of both equity shares, preference shares, convertible equity shares, convertible preference shares. Okay, all these are comes under money market. Here, debentures, equity shares, preference shares are issued and traded. This also includes private placement sources of debt and equity as well as organized market like stock exchanges. Okay. So then how does capital market work? Capital market consists of stock market, which facilitates financing through the issuance of shares or common stock and enables the subsequent trading thereof. So who wants to buy the share and who wants to sell the share, they'll approach the capital market, and in capital market all these will work. And then we have understood that capital market consists of primary and secondary markets. Primary is for new issue, and secondary, investors sell securities which are already holded or buy existing securities. Okay. So these transactions in primary market are between the investors and public, while in secondary market the transactions are between the investors. Okay. Then third one we are going to understand about is derivative market. Okay. In financial market, now we have understood money market. Okay. Money market is for short term, which is 1 year. Again, I am repeating, students, just follow my words. Okay. Money market is for short term, for within 1 year, and call money, it will provide the debt by issuing treasury bills, commercial bills, and call money market. Whereas capital market is for long term, where security shares, equity bonds, debentures are
Ma'am, you are not audible, ma'am.
Students, we have understood about primary, secondary. Okay, so primary market, as now we understood that it will new issue of shares will take place. Okay, whereas secondary market already traded securities or already holded securities by existing people will trade it. Okay, and then derivative market. Now we will understand about what is derivative market. Derivative means commodity market, ma. Okay, where derivative markets provides various instruments for the management of financial risk. So in the financial markets, the fluctuation in the stock prices, bond prices, currency rates, gold rates, interest rates, dividends create risk. Okay, so in capital markets, so the people will see for the next alternative, and the next alternative for the people who don't want to go for high risk, that is called derivative market. Okay, so to control the risk and also to take advantage of it, the financial product called derivative products came into existence during 1980s and 1990s. Okay, when it came into existence to control the risk of this capital market, it came into 1980, 1980s and 1990s. Are you able to understand, Ma? Hello, students.
Yes,
Yes,
ma'am.
ma'am.
Ha. So the derivative products, derivative means simply understand that it is a commodity market where gold, petrol, sugar, there are so many commodities which are traded. Okay. Now soya beans is also one of the commodities which are traded in derivative market.
Ma'am,
Okay.
commodity means goods or services, ma'am.
Goods, only goods.
Okay.
For example, gold, ma. Gold is also gold, silver, copper. Then petrol. Petrol is also a traded in commodity market. Okay. So
Okay.
these commodity market is called as derivative market. Okay. So the derivative products are future contracts, forward contracts, option contracts, and swaps. Okay. So these products help the issuers to gain an unusual profit from issuing the instrument. Okay. So what future and forward markets provides trading of products at some future date. So here in commodity market, we will trade. We have different options of trading. Okay, like future contracts, forward contracts, option contracts, and swaps. Okay, then we have insurance market. Insurance market facilitates the redistribution of various risks. Okay, for example, we want to face the risk, or we know that there some risk will take place in future. So to cover the risk, to come out from that risk, we will go for insurance market. So it deals with the selling of insurance policies, brokerages, insurance underwriting, or the reinsurance. You know what is the role of insurance company? They'll cover the risk. On we will pay some premium to them. If something will happen to us, if some accident take place, whatever the premium on basis of our premium, on basis of our policy terms, the insurance company will protect the future of our family. Okay, or in our business some risk is there, is involved, then we will buy some insurance to cover that risk. Okay, those are called insurance markets. Then we have foreign exchange markets also. Okay, foreign exchange markets are one of the most developed and integrated market across the globe, which facilitates the trading of foreign exchange, meeting the multi-currency requirements. Transfer of funds takes place there, and depending of the exchange rate and applicable. For example, dollar. Now Indian rupee is also accepted by 36 countries. You know that Russia started trading internationally with our Indian rupee. You know that, ma? Now,
Yes, ma'am.
now the Sri Lanka, I think it was started by Sri Lanka. Sri Lanka is 60% of its foreign is traded by our Indian rupee. Now, Indian currency is also one of the instrument in foreign market where Russia has accepted, and Sri Lanka declared that by accepting our Indian rupee, they are um, able to decrease their rate, means their payment in form of dollars. Usually they used to pay with dollars, no? Now they are paying with the Indian currency. And the same Indian currency has been accepted by Russia also. So what happens? They are able to decrease their expenditure by 60%. So when this statement is given by Sri Lanka, then Russia, other countries also accepted. Now, just 2-3 days before news is that in world 36 countries have accepted Indian rupee to trade their foreign trading. Okay, so it is called the how the financial system of India is strong now. Okay, so what is happening when the foreign countries will accept? Why the dollar rate is so high? Because dollar is accepted by all the countries. All the countries are ready to trade in dollar. Before that, what happens? If Indian currency is only in India, okay, in Dubai it has dinar, I think. So what called dinar currency is called as? Dubai currency is called as some name is there, no? In Singapore,
Real, I think.
uh, some for every foreign country have their own currency. But when we will do some foreign trading, we need some currency which is accepted by both the countries, isn't it? India should accept, Sri Lanka should accept, America should accept. And the whole world has only one option, that is dollar. Okay, after dollar, somewhat means just 1 to 2% cryptocurrency. And then if cryptocurrency is not there, other countries are accepting in the form of gold. Gold is universal. First dollar, then gold. Now, India is taking that place. Okay. So now, when Sri Lanka started, then Nepal started, then when they given statement that 60% we saved our money when we are using Indian currency, then automatically Russia also accepted the Indian currency to trade in foreign market. And now the 36 countries and the line goes on. Now again, yesterday's news was that more some 56 countries are ready to trade in Indian currency. So now the Indian rupee will become high. For example, our Indian 1 rupee is equal to 70 rupees of dollar, no? Now it will reverse. Within few years, it will reverse. For example, if some country wants to trade in Indian, they have to buy our currency. Okay, so now if we go to Sri Lanka, if we give our 1 rupee, they'll give some 27 rupees to us. Okay, so like that, this financial system, the whole financial system will manages the rupee also. Okay, through its markets, through foreign market, everything. Okay, so here again, if we go to the, we understood different financial instruments now, short-term instruments, medium-term and long-term. Then in types, we have primary securities, secondary securities, innovative securities. Okay. Then who are the participants in financial markets? So there are so many issuers of securities, investors in securities. Okay. And the intermediaries such as merchant bankers, brokers, etc. will participate. So the main role of participants in capital markets are stock exchange, broker, sub-broker, custodians, depositors, depository participants, clearing house, information providers, okay, merchant bankers, bankers of the issue, then underwriters will underwrite the value of shares, then registrars to the issue, then portfolio managers, and then we have mutual funds, then we have debentures trustees, we have credit trading agencies which provides credit to the institutions, and then we have venture capital funding, then we have market makers. So this is out of financial. So there are so many things, so many people who participate in the whole financial system. So now in this, the main thing we need to licensing already we know, hire purchase we know. What is factoring? Okay. So first we will understand factors. A factor is also an financial intermediary that purchases the receivables from a company at the invoice price less a discount for commission and fees. Then it advances 80% of the value of the receivables up to the company immediately, and the balance paid is amount paid after the receipt of the funds from the debtor. So for example, you might have, if some banks have given loans to the some people, car owners, okay, or some other people, but they are defaulters, they are not paying their money. So what happens, these factors will come, they'll say that we will collect the money, okay, first, and they will buy those peoples who have taken loan, and they'll pay, these factors will pay 80% to the banks, because banks doesn't have time to again and again go back to the defaulters asking money. It is so much time taking. So these factors will take responsibility that they are agents, agencies, and they will start harassing the people to pay back the money. Okay. And then 80% first they will pay, 20% again when the whole money will be received, they'll give to the banks, and whatever the interest extra charges will be taken by these factors. Okay. So here the three parties mainly involved. One is seller, second one is debtor, and third one is factor. Okay. And the firm is a seller of the receivables, usually a discount to the third party. And the debtor is the one who has make a payment to the owner of the invoice. And the factor is the one who purchases the receivables. Okay. You have any other class now? Now? Hello?
Yes, ma'am, we have.
Shall we leave now?
Yes, ma'am. Yes, ma'am.
Okay, students, thank you for listening. Okay, now
Thank
we'll leave in next class, we'll continue the rest.
Thank you, ma'am.
Okay,
Thank you.
thank you.